Hey now, it's Bill with Smart Trades. It's February 17th, Thursday, around 1:45 p.m. Pacific time. And right off the bat, let's take a look at a short-term chart, 15-minute chart of Apple. Um, Certainly, I would take this chart with a grain of salt because it is very short-term, and I think that the validity of shorter-term charts remain to be seen. Have to let them play out a little bit to see if it's correct, and if you're not looking at one of the trees rather than the forest, so to speak. So at any rate, with Apple, I think we do have an impulse wave down, a 5-wave structure to the downside, and we're working on a corrective wave too. If that's the case, there's a fairly good chance that Apple, at least on a short-term basis, has topped. I'm of an opinion that when Apple tops, the stock market in general will follow shortly thereafter. I could be totally wrong about that, but Apple has been one of the leaders on the way up, and I think when it does start to fall, I think it's going to be an indicator for the market at large. And here's the NASDAQ 100 and the NASDAQ advances. As you can see, on each and every peak of this rally, we have lower peaks on the NASDAQ advancing issues, and a rather sharp one on this last little rally. Now, could we make another moderate new high? Absolutely. That wouldn't upset the apple cart at all. What I would look at, however, is the breadth ratios. We do not want to see the breadth ratios start to break out above this upper trend line here while the market is making new highs and even taking out the top of the channel. But as it stands right now, if we get continued divergences, I would look to sell tests against the top of this channel in the NASDAQ and the S&P. Here is the S&P, and this is a chart of the S&P 500 cash and comparing it to copper. As you can see, copper has not confirmed this latest new high. Now, this is a relatively short-term chart, 60 minutes to be exact. But the S&P is right up against the top of its channel. We're also having breadth divergences there on the NYSE. Copper, like Apple, has led the way up for the last several months, but here we have a non-confirmation of this latest peak. I think that's telling. We shall see. My strategy has been to look to sell against the top of this channel. I've been doing that with moderate success. I haven't been losing anything, but I haven't made a whole lot. But I'm looking for low risk spots to sell up against the top of this channel. I'm going to continue to do that as long as we see these non-confirmations from Apple, from the breadth ratios, and from copper. Here is the Dow Weekly. This is that same trend channel, but we're drawing back on a little bit more. You can see we are getting a bit of a non-confirmation here in respect to volume also, basis the Dow Weekly. There's a tendency in Elliott wave theory for two out of the 5 impulse waves in a 5-wave segment to tend towards equality. Equality in the Dow would be right around 12,430 for waves 3 and 5. We're very close to that already. Today's high, I believe, is right around that 12,325, 330 mark. I don't have the live date in front of me. I do apologize for that. But at any rate, the point is we're getting very close, and we're also up against this channel. So if this count is correct, we should at least get an intermediate term correction, and the probable target for that correction is this previous 4th wave of 1 lesser degree, and that would take us down to about the 11,000 area. Alternatively, here is a very, very bullish count. Now, I've talked about the possibility of the S&P going up to around 1,570. Well, along with that, the Dow would probably go up over 14,000. In this count, we have a series of 1-2s. In other words, this whole pattern is only about halfway done from the July lows to its ultimate peak if, and this is a big if this is the appropriate count. I don't favor this count. I'm not acting on this count as the likely scenario, but it is possible, certainly, and this market has surprised to the upside. So If we go blasting through the 12,500 level on the Dow, I would consider this. The area to watch for on the S&P is about 1350 to 1370. If we start blasting through there, this count it may possibly come into play. But again, for now, I'm looking to sell up against this channel, the assumption being that we've got it correct. And even in the more bullish scenario that this is a third of a third, even in that case, there's a likelihood of an intermediate term correction. Obviously, this market has been going up, and up, and at some point it needs to correct, even if it is going to eventually go up over 14,000. So that's my way of thinking here on the Dow. The 30-year bond market. The bonds have surprised me in terms of the amount of rally that they've had in the last several days. That said, so far the rally to me does look corrective. It's gone right into a resistance area around this 119.5 area. If we were to fail here, I would favor another leg down. I'd watch the bottom of this channel for a failure. And on the other hand, if we get through about 120, I would say that would shift things into a more bullish scenario. If we get through 122, that pretty much breaks the bearish count, at least the bearish count that I see. At any rate, I would take bonds, as I say, one step at a time. Crude oil. We've looked at this chart over and over again. This is a weekly chart, obviously, of the crude futures, and you can see these two very similar shaped, wedge-type channel patterns. As long as we're in this range, basically roughly from 75 up to about 95, perhaps a little higher than that, I think that we're going to continue into more or less a sideways pattern. If we do break out in either direction, I would revise that. But for now, I think that basically this is a sideways type of pattern, and that's the way I would trade it. The Euro FX daily chart. This decline off of the early February high, I think best counts so far as a corrective decline. It's a bit of a surprise to me. I was looking for the decline, but I thought we were going to see lower prices. That said, we have seen somewhat lower prices, but the pattern is eking out a corrective ABC style decline, and it's holding at support. That said, if we do get through this low, and particularly through about 134, I would think that perhaps this is not indeed corrective and that we're going lower. On the other hand, a rally through the top of this little B wave here, that comes in around, I believe, 137.40, would be near-term bullish in terms of this pattern. It would basically confirm the probability that this decline is corrective and that higher prices are to come. Now, that said, higher prices in the Euro FX, lower prices in the dollar, probably bullish for stocks, so we shall see. Gold. Gold has, the pattern in gold has started to turn more and more corrective looking to my way of thinking. Basically we have declined over the last several weeks, which is what I was looking for, but are starting to hold and rally, and that leaves basically a corrective bull flag off the highs. So I think I don't know that we're going to see new highs in the immediate future. I'm not inferring that at all, but I do think that overall the pattern looks corrective, and if that corrective style pattern persists, eventually I do think that we will see new highs in gold, and that kind of sits well with the idea of a lower dollar. And whether or not stocks play along with that, we shall see. I'm more bearish on the stock market. I don't necessarily think it's going to follow suit with gold or necessarily the euro. But these are all moving parts, so we shall see. Bottom line, though, again, the decline in gold looks corrective. I think ultimately we will see higher prices. I favor that we're going to see it go more or less sideways between the recent highs and recent lows on this weekly chart. Perhaps up to about 1420 down to about 1300. So at any rate, that's it for now. Hope you're having a good day, and looking forward to the long weekend ahead. Thanks for watching. Bye-bye.